And welcome back to the Fearless Perspectives Podcast with your host, Kevin Jordan Campbell. Kevin, I am looking forward to this one because I was a business and financial news reporter for a long time. And I know this is a fact and a lot of people don't. Markets are volatile. There are always storms. They're almost all of the time. You don't know where they're going to come from. And it fits perfectly with what you talk about when you talk about investing, which is a fearless perspective. How do you remain fearless in a market that, God knows, if you look at history, there are plenty of financial storms. We just weathered one right here in 2026.
Yeah. We are in April, right, of 2026. And the Iran war has been going for like 6 weeks now, I think, something like that.
Mm-hmm.
And so that was that's been a storm for sure. It caused a lot of market panic. The markets are shifting back at this point, but it did cause a lot of panic. And you're right. There's another storm. It's inevitable. The storms always come. And there's another one coming. We just don't know what it is yet.
Oh, right. Yeah.
There's another market correction. There's another storm coming. The world is more connected than ever. So that also creates more storms than ever. And what I mean by that is that news used to travel very slow. Now everybody is connected instantly. What's going on in other nations. And sometimes, frankly, we think we know what's going on and we don't. It's, a lot of times we're listening to clickbait or, following clickbait. Social media is a massive influence on what's going on these days. And it's also a massive confirmation bias, right? So we talk about this in my book about what confirmation bias is and how it affects you when you're dealing with the markets. And the confirmation bias is basically social media is one of the largest sources of confirmation bias ever known to man, because as you like things, it feeds you more of what you like. So pretty soon everything you're seeing is stuff that you agree with, right? And so your perspective becomes even more ingrained that, well, this is what everybody believes. This is what's all over social media, right? This is all I see. It's stuff that just happens to agree with me. It's crazy.
It's crazy, but the whole world agrees with me, as a matter of fact.
So, that's a huge source of confirmation bias. And so we see these things and the world is just so interconnected now that, you get instant reactions on the news cycles all day long. One of the things that's always funny to me is, so I read market news, every morning. Starting at about 6 a.m., I'm reading the news and what's going on. The markets at that point, because I'm on the West Coast, that means markets aren't even open yet. They open at 6:30 Pacific. So markets aren't even open yet, but I'm looking at the news, seeing what's going on. And it's so funny that by 6:30, people are talking about how the markets are reacting and why.
Yeah.
I'm like, okay, so you already know why the markets are doing something, right? And it's like, you read, there's just so much news out there. And because the interesting thing is because I'm reading these news every day there is almost equal amounts of the sky is falling, and here's why, and everything is awesome, and here's why.
It's beautiful.
Right. Everything's beautiful. Everything's a rally. Everything. It's just.
But in fairness, I learned this a long time ago as a financial reporter. The world is that. Because the market really is a dynamic struggle between people who think everything is screwed. I have to get out of these stocks, and people are like, no, it's beautiful. I have to buy these stocks right now. So you talk about the interconnected world. I would add the world is interconnected. The technology makes it all faster, and what we're really watching are the dispute of these two particular visions that you just mentioned. No, it's beautiful. No, it's bad.
And on one side, there's people who argue the markets are very efficient and all that. On the other side, there's the people who are going, no, not only are they not efficient, they're bipolar and schizophrenic. And
I'm in that column. Okay. But you put me
They
there.
desperately need to be medicated. And it's kind of a joke around here every now to go look at in my office, there's screens all over the place that are running market data. And it's like, okay, the market is off its meds again today.
Yeah.
And so, because sometimes it just does irrational things. It completely does. Sometimes you can understand why something is happening, right? We have an oil shortage. Okay. That's going to affect everything, right? But sometimes you're like, okay, the markets are panicking and it's over nothing, but there's always another storm coming. And here's the thing that we talk about a lot when it comes to planning. If you have a plan, and now I'll use I love analogies. Today we're going to use a sailing analogy.
Okay.
Right? My wife, was it 2 years ago? She helped some friends sail a sailboat from Puerto Vallarta to Papate or somewhere out that way, Tahiti. I ended up meeting her in Tahiti. But these are 4 people, took us like a small, less than 40-foot sailboat. I think it was like 36 or 38-foot sailboat from Puerto Vallarta to the far Pacific Islands, right? Now, well, like I said, I flew into Tahiti and met her in Tahiti. Now, along the way, they ran into storms. It happens.
Oh, yeah.
So you prepare for the storm, right? So the thing is, there's always another storm coming. You just need to be prepared for it and have a plan for it. What happens when the storm comes? Because it is coming. And you've heard me talk about this on previous, the conversations we've had, previous podcasts. It all comes down to preparation. Now, that doesn't mean that everything's going to be perfect, right? We can't eliminate the storm. We can't make the storm go away. But what we can do is understand how we react to it and how we go forward with that, and knowing that there's another storm coming and being prepared for it. When that happens and you are ready for it and you are prepared, it's kind of like, oh, okay, another storm.
You can't predict when or if something is going to happen. What you do is you can prepare for it, as a matter of fact, and being prepared for it makes things look incredibly different, doesn't it?
Yeah, it totally does. And some people just seem to have the expectation the markets are just going to go up and up and up and then never go down. And it's just not realistic, right? So there's always another market storm coming. They're difficult to predict. You never know. We've joked before, I'll use this a lot, is that, there's always another bear market coming. The problem is you just don't know if it's Yogi bear or a grizzly bear, right? Yogi's just going to steal your picnic basket. The grizzly's going to try to eat you. But there's always another market coming. There's always another storm coming. There's always another bear market coming. It's being prepared and being ready for it and understanding that we have build systems in order to do that. Going back to that sailing analogy, boats are built to take it, right? The sailboat that they sailed across the Pacific was built to take it.
And I would imagine that the crew understood the risk that they were taking, and they understood what they could do to prepare for it.
Mitigate every risk they can, right? So when you do that, again, this goes back to the concept that we talked about in the last podcast about being fearless, right? It's like once you minimize, identify the risk, mitigate the risk as much as you can, and then move forward. So when it comes down to how do we prepare for that? Well, you try to evaluate as many of the potential risks as you can. And when you start looking at financial independence, and I use the word financial independence because I'm trying to get away from using the word retirement, because I think that's almost a dated term. What people are looking for these days is, it used to be, hey, you retire at 60 or 62 or whatever, you get the gold watch and you go sit on the rocking chair. That's not retirement these days. People are adventurous. They want to go out. They want to do stuff. We talked about on the last podcast, all the old gray hairs jumping out of airplanes that I saw, right?
Yeah, exactly.
A bunch of bald people and gray haired people, going skydiving. Retirement again, financial independence allows you to go live the life that you want to live. And financial independence isn't necessarily at retirement age. You could be, I know several people who are financially independent in their 30s and 40s. They have built enough wealth already that they are financially independent. So for them, retirement isn't a thing, right? It's financial independence. It's being able to do what you want, when you want, where you want, with whom you want. It's freedom. And when you are prepared and you start going through these things and looking at the planning and how you do that, you can become financially independent. That's perhaps before retirement age. And so that's one of the things I'm trying to get away from is that term retirement.
I like that. I like that a lot, as a matter of fact, because most of the people I know who are at retirement age or ready to retire are like, no, I want to keep doing things.
People ask me all the time, like, hey, when are you going to retire? Are you, frankly, some of my clients are concerned that I'm going to retire, right? They're like, what happens when you're not around anymore? I'm like, one, we've got a team here, so I'm not the only person. But two, I have no intention of retiring anytime soon.
Yeah.
I've joked about this before. Do you remember the show Boston Legal? Did you ever watch that TV show?
That was a long time ago.
It was a long time ago, but it was such a funny show. I loved that show. William Shatner and James Spader, and William Shatner plays this attorney, Denny Crane, and he's got like some form of dementia, and he calls it mad cow. He's like, yeah, my mad cow's acting up. And like when he comes to the office, and he's an older guy, but he's still coming into work every day at this law firm. But when he comes in, like everybody scatters, right? They do not, everybody's like, oh my God, here he comes, run, hide. I find that aspirational. So that's, that's where I want to be, is when I'm like William Shatner's age or 80 or whatever. Like I'm pulling into the office and everybody sees my car coming and they're like, oh my God, here he comes, run.
Oh my God. Okay, run. We got to do a coffee run. We got to get out. I got a client meeting outside the office. I got to go.
Because it's like, why, again, if you're living the life you want to live, retirement, I get it. Some people do need to retire. If you've been working in a business where literally your body is broken because of the type of work you've been doing,
yeah,
that's entirely different. But I know so many people. I've got one client, for example, that I just spoke to him yesterday or the day before, and like 5 years ago, he called me and he's like, "Can I retire yet?" He's like, "I'm done." He's like, "I can't take it." Right? He's like, "I'm done. Can I do it?" And I ran his numbers because we have the ability to do that. And I'm like, and we keep it running. And I'm like, yeah, you're there. And because he'd called me several times over the previous few years. I'm like, you're not quite there yet. You're not quite there yet. Well, he calls me one day and he's like, am I there yet? I'm like, yeah, you're there. You put in your papers tomorrow. Go for it. Just dead silence on the phone. Right. And I talked to him the other day. What he ended up doing was, once I told him he could retire, I'm like, yeah, you're there. You're financially independent, man. You can do whatever you want to at this point. It changed everything for him.
Yeah.
He's still working at the same company. He's still in his same role. He's reduced his hours, but that was 5 years ago. And that he could have retired, and he's still there. And he's like, just talking to him, when are you going to retire? And he's like, well, what I tell everybody at work every day is, when they ask, when are you going to retire? It depends on how bad you piss me off today. And he's like, I'm actually having a great time. He's like, I'm still providing a lot of value. But he's just, the knowledge that he was financially independent was a game changer.
Yeah, no, it's funny. That game-changing moment, though, came because he had planned, and because he had planned, the emotional content, as it were, was mitigated. So now he's like, can I do it? Can I? Yes, you can. Oh, okay, cool. That's great. I think I'm going to keep working.
And at this point, he's actually donating quite a bit of money because, again, he's financially independent. So he's actually having fun, and he's supporting some of his favorite causes. And he's not giving away everything, but he's giving away. He's giving a substantial amount of his time and resources to things he cares about. And he's like, I'm going to keep working because it makes it easier to do that. Makes it easier to donate my time and my some coin, to the things that I care about and the people I care about. And so he's like, I'm just going to stay at it until one of these days I'll wake up and decide I'm done. But until then, I'm having fun.
Or I'm going to wake up and decide I don't want to go to the office. I actually want to go on a river cruise.
My whole point to this whole part of the conversation is retirement was I think almost an old notion. And again, some people in certain fields, absolutely. But for a lot of us that are more, knowledge workers, financial advisors, things like that, and various professional services or engineers and things like that, there's just there's not necessarily a point. Now, that doesn't mean I want to be in my office, doing a 60 hour a week grind. But again, it becomes more about, I think what people are really after these days, freedom of time and place, right? Financial independence, and knowing that when the storm comes, I'm still going to be okay.
Well, I just was going to say, let's take it back to where we started this conversation now. So when that storm comes, not if that storm comes, when that storm comes.
Yeah, it's coming.
All of this prepares you for that moment. And if you're prepared, things look a little different, don't they?
They do. Absolutely. Preparation is the key. If you understand, and because again, it's not if, it's when. And it's interesting to me as an advisor, how often people forget that, yeah, there's another one coming. I mean, I don't know what it is. Again, I can't tell you where it is, when it is, what it is, but it's coming. And it's just the nature of the markets. Again, the world is so interconnected now. It used to be, it's a really interesting thing. If you look back at like a graph of volatility and valuation of the S&P 500, volatility in the markets was not, I mean, sure, there was always a little bit of volatility, but it was nothing compared to what it is now until like the 1980s. But if you look back at like charts on that, what happened in the 1980s that changed that? Well, one, that was when 401ks became very popular, right? The world shifted away from defined benefits, meaning pension plans, and shifted into investment plans. And also that little thing that you and I are using to communicate with each other right now, computers.
Exactly. I was just going to say technology is really what happened.
Right. It was technology and the fact that all of a sudden the average person became an investor, where investing back years, a couple of generations ago, or even just not that many years ago, 50s, 60s, 70s, 80s, that was for the rich people, right? That was rich people's, and it was institutions, right? Most people didn't have, were not holders of stocks and bonds and mutual funds and things like that.
Oh, I would venture that a lot of people who listen to these podcasts never poured over the financial sheets in the newspapers to look at stock prices.
Yep, you remember those?
Yes. Like, now if I want to know what a stock is, I just sit down here and I type it into I can type it into my keyboard, into my computer. I can see a history of that stock price. I can see not only what it's doing today, I can see what it's done for a long time. And if I want to, I can break it down to what it's doing by the minute. It is like amazing.
Isn't that funny? I hadn't thought until you just mentioned, I had thought about stock prices in newspapers for years.
I used to have a little ruler. I would run down the sheet.
And then remember, like, if you did find something, for example, there was magazines, right? There was also that was also when financial magazines were a thing.
Right.
And everybody had ads in them, Vanguard and, all of the various, investment firms had ads in them. And you would have to ask them to mail you information.
Yes.
A prospectus, and you would have to wait for the mail to come. So you could get it, right? And you get all the information on it because the internet didn't exist, or at least it was in its infancy at that point. So, things have changed substantially. And with that, all of these things brings volatility. It brings the next storm. And part of it again, too, is retail investors, just your average, mom and pop investor. The emotional factors in those does certainly play into the markets, right? Because people panic. And it's, I was talking to a friend of mine who's a pretty savvy investor the other day, and he was telling me about a call he got from a friend who was panicking during this Iran thing. And he's like, people are panicking when they should be buying. Right. And the problem is for the average investor, for many of them, they don't keep any dry powder. They're 100% invested. So they never have liquidity to take advantage of the markets when the markets are down. And then the markets go down. So they panic and sell. Well, now they have cash, but they just got out of the market.
But they just sold low. So, yeah.
Yes. Yeah. It's an emotional game. And that's part of it. And here's one of the biggest things. Being fearless is about controlling your emotions, right? That's what it really comes down to, is how do you try to remove as much of your emotion from this whole process as you can? And it's by having a plan. If you don't have a plan, you're going to be emotional.
I agree with that 100%. And I'll share a little story with you. I used to produce a lot of live television that millions of people watched. You sit in a control room, or you're a reporter or an anchor in a show that is live. There's no forgiveness there.
Right.
There is none. There is no do-overs involved. Everybody in that control room, everybody on a set, every reporter everywhere has got a plan. Nothing is gone unplanned. You know what happens. What happens if a bomb falls? In all seriousness, what happens if a bomb falls near me? We're not going to go to Bill because the bomb fell near him. We're going to go to Kevin because Kevin's the next town over. So don't go to Bill. Go to Kevin. Every option A, B, C, D. It's that way all through life is my point. And what you are highlighting here is you bring that same perspective to a financial plan and to planning for that day of independence.
Most people will spend more time planning for their annual vacation, if they take one, than they will for their retirement.
Yeah. Well, for those that don't have plans, who think maybe I should have a conversation with this guy because, number one, he's got a good sense of humor. And number two, he does seem to understand the value of a plan. How do they get a hold of you, Kevin?
Probably the easiest way is our website, peaksfinancial.com. There's a contact us form on there. So that's probably the simplest way to do it is just jump on the website, peaksfinancial.com. There's also a bunch of resources on there as well.
Go explore it. Take a look at it, check it out, and give Kevin a call. Cost you nothing. So do it, as a matter of fact. The other thing that costs you nothing is hit the follow button. Become a subscriber. If you're not a subscriber already, every time Kevin drops a new episode, you can give that one a listen, and I'm sure you will enjoy it as much as this one. And tell people about it. Let people know. If you like this podcast and it's useful, word of mouth is really the best tool of promotion there is, and we would thank you for it. So until next time, I'm Bill Tucker. On behalf of Kevin and everybody at Peaks Financial, thank you for taking the time to listen. And remember, go out there and be fearless. We'll catch you next time. Thanks for listening to Fearless Perspectives. If you found today's conversation helpful, follow the show so that you're notified when new episodes are released. You can also visit us at www.peaksfinancial.com or call us at 360-564-1811 to learn more about our approach. And remember, being fearless doesn't mean ignoring risk. It means being prepared, informed, and confident in the plan you've built. Any opinions are those of Peaks Financial and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. There is no guarantee that these statements, opinions, or forecasts provided herein will prove to be correct. The information contained in this report does not purport to be a complete description of the securities, markets, or developments referred to in this material. The foregoing information has been obtained from sources considered to be reliable, but we do not guarantee that it is accurate or complete. It is not a statement of all available data necessary for making an investment decision, and it does not constitute a recommendation. Past performance is not a guarantee of future results. Investing involves risk, and you may incur a profit or a loss regardless of strategy selected, including asset allocation and diversification. Raymond James is not affiliated with and does not endorse the opinions or services of any organizations or guest speakers mentioned herein. Investment advisory services offered through Raymond James Financial Services Advisors, Inc. Peaks Financial is separately owned and operated and not independently registered as an investment advisor.